everyone, and welcome to Chapter 1 of Advanced Audit and Assurance. So, before we begin with Advanced Audit and Assurance, we need to understand a few things. Okay, in a company, there are three people. So, there is a triangular relationship between shareholders, auditor, and the management or directors. Now, shareholders are the real owners of the company. They have invested their money into the company to start the company. So, shareholders are the real owners. But these real owners do not know how to run the company. They do not have the system and the knowledge to run the company. So what these real owners or shareholders do is they appoint somebody known as the management or directors to run the company on their behalf. So management or directors are known as the agents of the real owners. So real owners are the principal and management and directors are the agents who run the company on behalf of the shareholders. Now while they are running the company, every year they have to prepare a books of accounts showing the position of the company, and they have to submit it to the shareholders that see, you guys had invested your money in this company, and throughout the year this is what we did. These are the assets, these are the liabilities, these are the investments, whatever, these are the sales, these are the purchases. So at the year end it's like a report card that management or directors have to prepare, that is the books of accounts including the P&L, the cash flow, the books of accounts, the balance sheet, everything is prepared and submitted to the shareholders to give the shareholders a proof that see, your money is invested in the company and this is what we have been doing with your money. Okay, now once this money is invested and you give books of accounts to the shareholders, sometimes shareholders might feel that the management or directors are not speaking the truth. So have you heard of the concept of window dressing the books of accounts, right? Window dressing the books of accounts means showing a position of the books of accounts which is not true. So like faking it. For example, if the company has assets of 5 lakhs, the management or directors will say we have assets of 20 lakhs just to show that we are in a very good position. So management or directors like doing it because they like impressing the shareholders. Now, shareholder is somebody who doesn't have knowledge of how the books of accounts is prepared, what is happening. So what the shareholder does is, shareholder appoints the auditor. Shareholder appoints somebody known as the auditor. Auditor is an independent external party. Who's the auditor? He is an independent external party. Why am I writing external? Because auditor is not a part of the management. He's an independent external party who goes to the company on behalf of the shareholders, checks the books of accounts, checks everything, and then prepares something known as the audit report. And this audit report is submitted to the shareholders. Now in this audit report, the auditor specifies if the books of accounts prepared by the management or directors are proper or not. Okay, so shareholders don't understand how the books of accounts are prepared, so they appoint an independent external party known as the auditor who goes in the company, checks the entire books of accounts, check whatever the management has prepared, and then prepares an audit report, and he submits the audit report to the shareholders saying that your money is safe in the company or your money is not safe in the company. So this is the entire story of audit, and your entire audit revolves around this story. Okay, now the chapter that we are going to study here is regulatory environment. Now what is a regulatory environment? Regulatory environment is having rules and regulations in the company. Okay, having proper rules and regulations in the company, and what happens if there are no rules and regulations. Okay, now let's start with the chapter. The need for assurance services. Now, just now in the example, we saw that shareholder appoints somebody known as the auditor to go in the company on behalf of the shareholders and provide the shareholders with an audit report, so the shareholders can trust the audit report and so that the shareholders can trust the books of accounts prepared by the management. So this trust is known as providing assurance. So what is the need for providing assurance? Now let's see. Assurance professionals provide reports that give an independent opinion as to whether the subject matter complies with the predetermined criteria. Assurance professionals are your auditors, and these auditors provide audit reports that give an independent opinion, because auditor is an independent person. So it gives an independent opinion as to whether the subject matter, which is the books of accounts, are in accordance with the predetermined criteria. That means whether the books of accounts are prepared properly in accordance with the standards. And if the books of accounts are prepared properly in accordance with the predetermined criteria, this enables the end user of that information, that is the shareholders. The end user is who? The shareholders who rely on this report. So this enables the end user of that information to place more or less reliance on that information when making decisions. So if the auditor provides a report to the shareholder that yes, your money is safe and the company is a good company, so that means this enables the end user to place more reliance on that information. But if the auditor says that no, your money is not safe in the company and the management is falsifying with your money and the management has created a mess, so then the end user will decide to place less reliance on the management information. So whatever audit report is prepared, that independent opinion enables the end user of that information, end user is the shareholder, to either place more reliance on that information or either place less reliance on that information when making decisions. Now, what are the decisions that the end user takes? Decision of buying and selling shares. Okay. Now, when decision is taken, decision makers within financial markets need to have confidence to make informed decisions. Now, whenever we are doing a buying and selling of shares, we require that confidence to make this decision. I will give you an example. Okay, you have rupees 50,000 that you have saved from your pocket money. Okay, you have two companies, company A and company B. Both the companies are making similar kind of profits. Both the companies are having good cash flows. Both the companies are, more or less the same category. They are making similar profits. They are giving similar returns to the shareholders. You have to invest 50,000 in one of these companies. Out of this company, A company is audited, okay, and company B is not audited. You have to invest 50,000. You guys will tell me in which company will you invest the 50,000. Okay. Now, but natural, you will invest your 50,000 in company A. Why? Because this company A is audited, right? This company A is audited. So why are you trusting the audit company? Because when it is audited, you know that an auditor who is an independent person has checked it completely. Whereas company B has not been checked by anybody. But company A is checked by somebody known as the auditor who is an independent person. So it gives you the confidence to make this informed decision. And that is the need of assurance. It gives you an assurance, it gives you a confidence. In order to make these decisions, they need information they can trust. The main investment decisions that take place concern the buying and selling of shares. Without credible or reliable information at their disposal, investors cannot make these decisions. It's very difficult to make a decision as to which company to invest in. For that, we need to have a good confidence, and confidence comes from audit. Also, it's not just the shareholders who rely on the audit. There are a range of other stakeholders also who rely on assurance services. So that's the need for assurance, that is the need of the hour for assurance. Okay. Now, global regulation. What is the meaning of global regulation? Now, what happens is, in India, we follow the Indian standards. In the US, they follow the US GAAP. In the UK, they follow the IFRS. So since everybody follows a different standard, there is a lack of harmonization. What is harmonization? Harmonization means equality. So the main problem is that harmonization requires national regimes to adopt international standards of auditing. Actually, everybody should follow the same international standards, so there is equality, there is harmonization. But many countries are not following that. Many countries are following their own standards. Also, many countries have adopted the ISAs, but they have been adapted to suit their local customs and laws. That means, although a few countries have adopted the ISAs, but they have been adapted with a twist. Like for example, in India, we get the Chinese food, right? But do you think it's the same Chinese food that we get in China? Like, will you even be able to eat it? It is so bland, the Chinese food that you usually get in China. So in India, the Chinese food that you get is an Indian version of the Chinese. So what we have done here, we have adopted the Chinese food, but we have adapted it, that means changed it to suit our local taste buds. Same here. Many countries have adopted the ISAs, but they have been adapted or changed to suit the local customs and laws, and because of this, many differences still exist in the quality of audit worldwide. So the audit that happens in India, the audit that happens in US, the audit that happens in UK, it's not the same. There's a difference in the quality because of harmonization, because every country is either following their own standards or they have adopted the ISAs, but they have adapted it with a twist to suit their local customs and laws. So this is a problem of global regulation, and slowly and steadily they're expecting every country to follow the ISA and have an equality, so that in the world, wherever your company is based, the quality of your audit will be same. So that is the end result that they want to have, that quality of audits should be same everywhere and anywhere you go. So that is my global regulation.